S corporation business structure. Gotta love it. We are looking at S corporations. Now, diving in here, we do have lessons on this where we'll go more into depth on them. In S corporation, it's a business structure that combines the legal protection of a corporation with the tax advantages of a partnership. You might say, oh my gosh, this is amazing. Why doesn't everyone do this? Well, you cannot list this on the public stock exchange. An S corporation has a lot of restrictions on who can make an S corp. It's generally for smaller businesses. I myself have had an S corp at one time. There was only two of us owning it. It's not like you're dealing with hundreds and thousands of people owning it. Now, how do you actually get an S corporation? You have to file articles of incorporation with the state to establish yourselves as a corporation. Then you file an election with the IRS to be treated as an S corp for tax purposes. That's an important distinction as well. Liability, like C corporations, shareholders in an S corp are generally not personally liable for the debts and obligations of the corporation. That means that the corporation's creditors cannot come after the personal assets of the individual shareholders to satisfy the corporation's debts. However, if, like we mentioned, you do just go ahead and take on any recourse debt or secured debt or anything like that, yeah, people can come after you. It depends on the type of debt. But overall, why do we mention this? Because if you're in a general partnership, people can just straight up come after you. It doesn't matter if you have any secured debt, they can come after your personal assets. So you're on the hook there. Flow through taxation, S corps are pass-through entities, very similar to partnerships in how they work with a Schedule K and a K1, flowing those items to your individual 1040. This means that profits and losses flow through to the individual shareholders and are reported on their personal tax returns. This allows S corporations to avoid double taxation of corporate profits, which is a very sweet deal in my mind. Here, losses, S corporations are not allowed to use the net operating losses at the corporate level, which we've got a whole lesson on how corporations use net operating losses to offset income from future years, from past years. But individual shareholders can use losses because remember, losses are a good thing for tax purposes. When we deal with book purposes, when we deal with financial accounting, income is good, expenses are bad. When we deal with taxes, when we deal with your tax return and cash basis overall for this, income's bad, losses are good. So remember that, right? If you have, obviously you don't want to have losses to actually lose money, but if you do have losses that you got through, deductions and legal means, of course, we're not trying to do anything illegal here, then that's going to be good. It's going to help you to offset income on your tax return. Loss deductions will decrease the shareholder's basis in the S corporation, but basis cannot go below zero. If you want to memorize that now, I think that would be good. Basis, generally speaking, cannot go below zero. In any of these flow-through entities, you cannot have negative basis. And that'll help you on a lot of different questions throughout the exam. Now, for management, S corporations are managed by a board of directors who appoint management. Shareholders have voting rights in the corporation and can elect the board of directors. However, if you're a very small S corporation, you're probably not going to really have this. You're not going to really worry about that. If you got two people and you're only making $100,000 a year, which, hey, that sounds pretty nice, but that is a relatively small S corporation. You're probably not going to go through the whole process of having a board of directors and all that. Now, for ownership, S corporations generally allow for free transfer of ownership unless otherwise agreed upon. However, there are some restrictions on ownership, which this is something we'll see in the S-Corp lessons. We all have to memorize the requirements to be an S-Corp. Like I said, otherwise everyone would become an S-Corp because it's a great gig. The number of shareholders, you cannot have more than 100 shareholders. Memorize that now. You'll see that a lot in multiple choice questions. And then the type of shareholders, generally speaking, you can only have individuals, estates, certain trusts. We'll dive deeper into the examples of those as well. All right. Here we're going to see a bunch of tax forms, and this is going to be a great way to show how everything flows through together. And I personally love the tax forms. I hope you benefit from these. I've only ever heard great feedback from candidates I work with in terms of showing them how this all works in the tax form. So you're doing your business, you have an S-Corp, you make some money, you report it on your gross receipts, returns and allowances, right? Boom, boom, boom. You report we get some cost of goods sold, got $10,000, maybe subtract $2,000. Here's your net gain. Here's your total income or loss. Awesome, right there. Then we're going to see some deductions here. Deductions, that's the category that we are in here. We're going to see compensation of officers, salaries and wages, bad debts, repairs and maintenance, all this good stuff. I would get generally familiar with this form with, again, all the tax forms, because likely what can you see? You'll see a sim with a lot of information, be it a financial statement or just a general ledger or trial balance or anything of a list of various different amounts you'll have to use to calculate the ordinary business income. This ordinary business income gets calculated here. Now note, this is very similar to how it works for partnerships. In essence, these are very, very similar forms. So just, again, a note there as well. The S corporation reports its overall income or loss on the Form 1120S. This is the income tax return for an S corp. Memorize that as well. The S-Corp then allocates a portion of that income or loss to each shareholder on the K1, which is also a part of the Form 1120S. You kind of break it off and give it to each shareholder at that point. The individual shareholder reports the amounts from their Schedule K1 on Schedule E Part 2 of their Form 1040, and then the total from Schedule E is then transferred to the Form 1040. Now, this may seem like overkill, just all these different steps to memorize. However, I'd say memorize them. They are important. And not only memorize them, but visualize them as we walk through all of our various slides. Here we go is our Schedule K. So we see that ordinary business income would get reported here, and all of those other separately stated items. And as I said, that is a very common sim, very commonly asked multiple choice question. Make sure you know the various separately stated items. For the most part, these are all separately stated items over here. And even though we have that ordinary business income that comes from the face of the 1120S, that's still going to be a separately stated item. So that's just something to get used to, get familiar with. A note here is that this is page 3, and we just came from page 1. As mentioned in partnerships, we kind of just look at the pages of the tax form that are most important to you. That way we don't kind of go overkill here. You know, a lot of these items, like I said, they will get reported on the K1 because guess what? The K1 is just a Schedule K, but broken up for each individual shareholder. As we see here, all of the same items. We've got ordinary business income, net rental real estate income or loss, all of these items, interest income. One common trick is interest income will be included on the face of the 1120S. It will go into your ordinary business income or loss. However, interest income, that's a separately stated item here. And then there are some other ones that we will see as we continue to go through those lessons where they'll fall into other income or loss or other deductions. But again, good overall process. So then those amounts flow through from the Schedule K to the Schedule K1, which again, remember, is still part of the 1120S. And then this is given to the shareholder. And then what happens next? Drum roll, please. Dum, 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 dum. It is the Schedule E. This is where you're going to now be on your individual income tax return. This is on the Form 1040. And look at that. You're going to start putting in all these separately stated items in various points throughout these tax forms. So that's just something to make note of. We've got the other page as well. Schedule E right here. And this is where your total income or loss is going to go, which then is going to flow onto Schedule 1, which then is going to flow through onto the face of the 1040. That's the overall process. And this, again, this process of flowing through the tax forms is something I will walk you through a lot, but also feel free to do it yourself as you get just different various questions about it. Where does it originate and where does it end? There are also going to be resources that we have, depending on the year, depending on updating them as well. For example, what I like to do, and this is something easy to pull up on Google. This is something that we'll have to update consistently on the site if we end up having it. This is going to be where you download, let's say, just a big Excel sheet with a bunch of tabs, and you can kind of flow through all of the various tax forms. You enter one number, for example, on an 1120, and you see where it flows all the way down onto the 1040. That's something that I think is incredibly helpful as well. Something I do, I mean, that may be overkill at that point, so that's why we likely will not end up including it here. But if that's something that would help you with visualizations more than what I'm doing just by showing you this, then please feel free to do so. Then on the Schedule 1, you see we have all of our Schedule E amounts, boom, line 5, and then taking it all home. Also, I would definitely memorize the items that go in Schedule 1. That's just something as well for sure. Definitely recommend doing that. And then right here, Schedule 1, it looks like these are adjustments to your income, adjustments to income right there. Boom, that's how you get at adjusted gross income. So for example, another question could say your separately stated items. Are those above or below adjusted gross income? And those would be above because your separately stated items, they flow to the K1, they flow to the Schedule E, then they flow to Schedule 1, and Schedule 1 goes above AGI. So again, that might be seeming like overkill, but see it, you heard it right here. You heard it here first, folks, unless you're coming to us from somewhere else. But this would be something quite important to know for the exam. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because Who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.